And Shedley, I want to come over to you now because I know that there's specific things that people want to know. So when is a good time to approach the bank? Some of those questions that I asked at the outset. And it would be great if you come in now and kind of tell us some of those specific things that people need to know before they approach the bank, and then certainly as they kind of feel like they get closer.
Thank you, Diane. And again, thanks for having me. Thanks and welcome to the remaining panelists and to the business people out there. So every business is different, and based on the stage that they're in and how well the operations have been set up would impact that business's readiness for business credit. I'm sure many of the business owners viewing today would agree that it is more difficult to access business credit in the earlier stages of a business when they've established. So looking at the criteria that I have up on the screen here, what I'm going to do is deal with those that are more applicable to those businesses that are in their earlier stages and address those together. So as a business that is relatively newly formed, you may wish to approach your bankers for credit when, one, you can demonstrate that there's a market for your product or your service. Two, have gained sufficient experience, expertise, or have developed a good track record in your field. Three, have a good or satisfactory client base. Four, have accumulated sufficient equity in your business or collateral to pledge for the loan. Your banker may require your business, particularly if it's newly established, to meet all, one, or some of these in considering credit. Why? Businesses are at their most vulnerable when they are newly formed, and it's at this time when they often represent a higher credit risk. So in essence, what bankers are trying to establish in assessing credit for newly formed business is, as we say in Trinidad, if they could stand your bounds, whether the business has gained sufficient footing in the market so that they can effectively compete with the incumbents and are less likely to fail. Additionally, what we are also seeking to determine is what I often refer to as the business owners' participation in the risk of their business. This is the equity one would have accumulated in the business to date, the difference between what one owns and what one owes, and would represent initial injections made, profits retained and reinvested in the business, and any supplier or other business credit obtained. Bankers want to know, as a business owner, that you have adequate skin in the game. As stated previously, each business is different, and the path taken to establish themselves would vary. So business owner A may be a manager in a similar business or had a side hustle, let's say, which allowed them to gain significant experience and a good reputation in the industry, while business owner B may have strong family ties and was able to secure business investments from their relatives. These 4 boxes, right? To be clear, these first 4 requirements are not exclusively needed for newly formed business only. These are areas that we will also be examined for more established businesses as well. But they are expected to be a greater challenge to the newer kids on the block. The first 4 requirements aid in part in assisting bankers in assessing the 5th criteria on the list, which is a requirement for everyone seeking bank credit, and that is to have the ability to service the loan. This is one of the most important criteria and is the most self-explanatory. You must be able to demonstrate that your business has the capacity to service the loan for the life of the loan. And it highlights the need for the various documents that will generally be required to accompany your loan request, which we will go through a little later, right? The final 2, which is when you, 1, require additional space to facilitate your growing business, or require additional working capital for day-to-day operations or to purchase stock or inventory. These speak to the growing needs of a maturing business as they seek to expand and become more efficient. Parvati said it in her first when she first started speaking. Banking is a relationship. The bank can provide support when we know and understand what is happening in your business. So in both of these cases, reach out to your bankers early to discuss your business operation and expansion plans so as to determine how much you qualify for, what collateral is required if necessary, or even to realistically see that at this juncture, it may not be the best time to pursue such an expansion.